Hi, my name's Michael Scherini from Scherini Lawyers. Today's another one of our YouTube series educating the community on legal matters and introducing business professionals and industry professionals who can speak to these matters and educate the community. Today I've got Judy with me. Hello, Judy. How are you doing this morning?
I'm doing very well. Thank you, Michael. Very lovely to meet you again.
Thank you. Lovely to see you. Would you like to tell us a little bit about yourself, about your business, your background, what you do?
Sure. Hi, everyone. My name is Judy Zhang. I'm the founder and director of Dealflow Business Advisory, and I work as a business broker and advisor. So we focus on business sales and strategic exit advisory, typically from $500,000 to 20 million range. I work with business owners preparing to sell, buyers looking for the right acquisition, and also businesses that need to be positioned properly before going to market. So my before I start my advisor role, my best personal record is 30 settlements for small businesses in 1 year.
I know, you're very well respected in the industry and excellent at what you do. And so very happy to have you on today so you can give some insights about things going on in your industry where they cut across the legal matters. And we're going to talk about a few things today. The first topic I want to talk about is, the broker advisory side, your side versus the legal side, and who does what. At a high level, you help get deals moving commercially, as far as I understand it. Lawyers help make sure the deal is properly structured, protected, and documented in the right way. What sort of things do you usually do in the broker side for your clients, Judy?
So from the broker side, it starts with understanding the business. Start from how it makes money and what a buyer will actually pay for and how transferable it is. Then bring it to the right buyers and manage the process, including qualifying buyers and handling negotiations. A big part of the role is bridging the gap between what the seller wants and what the market will actually accept.
And look, from our perspective as lawyers, we always think about managing the risk around it. We think, well, how's it going to be structured? Is it going to be structured as a share sale? Is it going to be structured just as an asset sale? There's different types of sales and business sale contracts that can be drafted. Things like allocating the risk, what the terms are going to be. Are there any licenses, leases to be assigned? Is there any consents needed? Are there issues around employees, restraints, warranties, indemnities, employees transferring, employees seizing? What happens if something goes wrong before or after settlement? What are important in warranties and indemnities given by existing directors or outgoing shareholders and so forth. So it takes a lot of experience drafting these kinds of documents and being involved in these transactions to prepare comprehensive
Mm.
documents that address all the issues. And for example, whether you're buying or you're selling, you want a good lawyer who understands where the risk is in the deal. I recently had a case where someone was selling a medical practice. And they had a bunch of staff that were working as reception staff, and the buyer didn't want to take across particular staff. And it was important that the employment clauses in the agreement were drafted in a way to make clear that certain employees were not going to be continuing and to make sure that there was adjustments there for the costs of paying out those employees for some of their entitlements. So failing to understand the deal in depth and all the costs surrounding the deal could leave your client exposed. And it's the lawyer's job to make sure that those loose ends don't occur. So um, that's when it comes in, when you need someone quite experienced that deals with businesses on a regular basis.
That's a very good example. So because recently I'm dealing with another business and towards settlement, it's there are around 10 staff. The buyers and the vendors, I handle the process quite smoothly. They become friends, and it's also about the staff management. the staff transition and the because the vendor want the buyer to keep the staff in the way he wants, but the buyer actually plan to cut 2 to 3 rows. So yeah, it's part of the negotiation, but everything goes smoothly, then the lawyer will need to prepare a proper clause in the contract to make sure both sides are protected. It's a not easy job.
It's also for the lawyer to ask the right questions, and the lawyer may also guide your client, for example, Judy, but you may also yourself have questions that you direct towards a lawyer. Your um, business brokers also may seek legal advice about their position in the whole process as well as an agent, effectively. And that's a whole different area of law, agency law, which we're not covering today. But there's so many different elements, and a good lawyer, experienced lawyer, will know the right questions to ask. Yeah, very important to make sure that everything's addressed in the process thoroughly. Things are done carefully with proper due diligence. For example, you're on the buyer's side. If you're on the vendor side, you also need to do due diligence. It's just different due
Yep,
diligence. It's not the same thing. You're looking at different risk management from the perspective of the deal overall and what the terms look
yep.
like. So
My understanding is that doing due diligence is very important and understand what the existing performance the business has already been done in the historically, and help them to create perception and build confidence is also something very important as a broker side.
yeah, I think I agree with you, Judy. I think that's fantastic advice, and we would say the same thing. It's important to do due diligence, and we would always ask that, even if it comes to the point where people come to us with a deal, we say, look, we may not be dealing with yourself, Judy, who we know is going to be thorough. We may be dealing with someone else. So we always ask the question, have you done the due diligence example? Whichever side of the transaction, especially the buyer side, because you're coming in the unknown and there could be skeletons in the closet. And not just looking at the business overall, but looking at the financial history of it and where the profit and loss position is, what the trading figures look like. Like, are you buying a business, or are you buying a problem? If you're not making money out of it, maybe you're buying a hobby. If it's all well and good, if that's what you want to buy, but if you want to make money, you need to do your due diligence.
Yeah. Okay, Michael, I have a very good question for you. It's
Yes.
not a very easy to answer question. For example, you acting on behalf of the landlord, and I act on behalf of the vendor and helping the buyer to um, purchase the transition. Okay, on the settlement day, the landlord instructs you to refuse to sign the transfer of lease by asking my vendor 20% of the contract price of the business. So what you gonna do for this case?
Well, if I'm acting for the landlord, is that what you're saying?
Yeah, but it's not ethical.
Well, it's not ethical, of course. It could give rise to all sorts of issues. So if you think about leases often have clauses around consenting to transfer of leases, and the most common clause, these are general clauses, they don't really change. If it was a retail lease, for example, it would be very standard. It might be one of the REIV or LIV standard leases, but there's always generally a clause that says that they must not unreasonably withhold consent. So there's a risk that the landlord could be in breach of the lease if they're unreasonably withholding consent. But the reality is, I'm helping the landlord, so I'm helping the naughty person here, who's misbehaving, but it shouldn't get to the point of even signing the contract. Realistically, it shouldn't even get to settlement date without having had that all lined up. Now, what your situation is, maybe they have consented and then they just try to
Yes,
take
they did.
advantage of the situation at the final hour. And really what you could probably do is, if the buyers and vendors perspective is, it's the landlord that's getting in the way of the deal. So the buyer and vendor could really just consent to extend the settlement date. This is usually what we do when we encounter issues at the final hour, is the buyer and vendor work together because they don't want the deal to fall over because someone else is misbehaving. Extend the settlement date and then work out and get legal advice about how to deal with the landlord. Now, I can't give advice because I'm acting for the naughty landlord, aren't I? But that could give rise to a whole series of different potential causes of action. It's completely exploitive, And as I said, it could be a breach of the lease. So it may, if it's a retail lease, it may have to go to VCAT, may go to the Victorian Small Business Commissioner for a mediation, although there's delays there. So yeah, it's really requires an analysis of the facts of the case and involved, and to work out what exactly the landlord has said and what they're doing may give rise to other causes of action as well. Um, but that, in a nutshell, would be how I would usually handle that situation. And perhaps the vendor or the person trying to sign the lease might have to take the landlord to VCAT.
Mm.
And if they're found to have breached the lease, then obviously that gives rise to things like loss and damage. Loss and damage potentially is the associated costs and expenses or default penalties associated with the extended settlement date or missed opportunity,
Yeah.
or maybe the buyer pulling out. It's a very risky position for a landlord to take. Most of the time, landlords won't do that. They're properly advised
Mm.
because it could expose them. Let's start with sellers. Like, what should owners be doing before they go to market, Judy?
So for sellers, the fundamentals are quite simple. They need realistic pricing and clean financials and a clear explanation of how the business works. That's just the general basis. Because buyers are not just buying the past, they are buying what they believe they can continue to grow the business. And one example is that recently I'm just handling one um, large business. It's a manufacturing business, has been on the market for 2 years by another agent. I've checked the information memorandum. It was actually not positioned properly. The presentation and what the contents in the information memorandum is very important and need to be tailored and customized to target the right buyers and investment group rather than to, for example, in this case, I think that one was prepared just to target the business customers itself by discussing too much about the history and the products, not the potentials, not the actual how the business works and what the future can be improved by some, for example, the automation, yeah, that part of topic in the information memorandum. Ideally, the exit plan should be thought through before going to market, not after buyers start asking questions.
Let's put the legal side on that. Get the business structure clear. Once that's all in order, once everything you've done's in order with your client, and you hand the brief to the lawyer and you say, okay, now lawyer, Mr. Lawyer, I want to get the business structure clear in terms of whether it needs to be perhaps even restructured before it's sold. That might be a point that you need to consider with the lawyer, or whether it's just going to be sold as is. Um, Making sure the contracts are in order, checking the lease position and the remaining term to the point we just talked about earlier. Clean up supplier and customer agreements where possible and collect any outstanding debts and so forth, and write off bad debts and so forth, and clean up the books as best you can with your accountant and bookkeeper. Um, and understand what you're actually selling, which I touched on earlier in our discussion, which was, are you selling shares? Are you selling just assets because you've got some key asset? I don't know. Maybe you have a business worth nothing, but you own a crane worth $5 million that someone wants. I don't know. Are you selling goodwill? Are you selling a technology business where you're selling heavily protected and secretive intellectual property that you might not even be allowed to inspect without a very comprehensive non-disclosure agreement in place? The person selling might need to be very careful about who's looking at that. Stock. Are you selling stock with it? Is there no stock? Is there any value being put on the stock? Some businesses have stock that's worth nothing. Some businesses have stock that's worth a lot. You might have like a bunch of computer chips,
Yes.
you know, maybe, sitting in your warehouse that's worth a lot of money and hard to come by. You might not. You might have some, boxes of food in your little shop that's not really worth anything. Um, Plant, website branding, all sorts of things that need to be considered when you're selling a business. Commonly, buyers want to see several years of financial records, tax documents, accounts, cash flow, and sales before they feel confident. So this is why sellers need to be organized before they go to market. There's no point selling something that's in a mess and trying to fix it on the go. Much better to fix it before you or before you go to market, definitely before you go see the lawyers.
One thing very important is that if the numbers are messy, buyers either walk away or the business will be discounted the price heavily. So that's what I always
Yes.
worked with the accountant by understanding the numbers, including the structure and balance sheet, profit loss properly before present the
Yeah.
financials to the buyers.
So if you're a vendor, a seller, don't give the buyer leverage to negotiate your price down. And the better you can present it, the more chance you have of getting the price you want and taking that leverage away
Yeah.
from the buyer.
From a buyer perspective, actually the smart buyer, their key question is normally focus on whether the income is real and repeatable. Then you look at how dependent the business is on the current owner, whether there are hidden costs coming, and whether the staff and the lease structure makes sense. Okay, another thing is that some businesses, for example, is heavily dependent on the current owner's reputation, and the buyers will also negotiate a longer transition period. So in general, buyers always need to ask themselves, are they buying a job, a lifestyle, or an actual investment by understanding the business thoroughly? They want to understand every picture of the business.
Yeah, yeah, very much so. It comes back to my point that I made earlier. Are you buying a hobby, or are you buying a problem, or are you buying a business that makes you money? Key questions to ask. Is the juice worth the squeeze? You do need to
Mm,
assess first
yeah,
what you're buying, but the seller also needs to assess if they've got something to actually sell, whether it's not just attached to their name. As soon as they sell it, all the clients drop off or go somewhere else. And what's the retention like? Is there a plan for retention and introduction to existing client base? That's another thing to consider from a buyer's perspective is are you going to set up meetings with all the key clients? Introduce yourself, take them out for lunch, get to know them because they may not be tied to the business. They may be tied to the owner, but they may be prepared to stay with the business. From my perspective, the buyer is always looking at what they're actually acquiring, what liabilities are going to stay with the seller, what risks move with the deal. They'll be trying to move as much liability to the seller as possible, unless there's a good price, then maybe they're prepared to take more of the risk and liabilities. What licenses, approvals, or contracts are transferable, what aren't, what are going to be difficult. Um, some may not be as simple as others. And which bodies do they have to deal with? Are they private individuals, government, council? Are there different regulators? Are there disputes, claims, defaults, or hidden legal issues in the background, litigation proceedings? Have you instructed your lawyer to do a comprehensive search? All these things from a buyer's perspective, this is what they need to be asking, so they need to be ensuring are in the contract. There's a lot of work on both sides of the transaction, but they're approached in, like I said, same thing. Due diligence is done in different ways. It's not just a buyer's thing; it's a vendor's thing as well, which is a common misconception that due diligence is only for buyers. It's not. It's for both parties to a contract because you need to make sure both sides need to make sure that they understand who they're also entering. Because entering into a deal, for example, as a seller with a buyer who can't complete or has no assets behind them, was going to pull out, could leave the vendor with as much of a problem or losing other offers or deals that were on the table. So due diligence is important from both perspectives.
yes. So to me, for the buyer side, in order to protect my vendor, because every time they present the buyers for the lease transfer to the landlords, the landlord normally will check the buyer's financial asset liability statement, and also whether for the vendor side, I need to make sure the buyer will have the ability to pay for the vendor at the settlement. So checking the financial situation of the buyers are also part of my job.
Now, I just want to talk about when deals usually wobble. This is probably the most useful part for people listening. Where do deals usually start falling apart from our experience in the industry in knowing where things go wrong, from things we've seen in the past and other transactions that I've observed, legal cases and so forth I've been involved in coming from a litigation perspective, trying to clean up an issue that I haven't necessarily been involved in the transaction, but I see and read, legal cases. I understand where things go wrong from a legal perspective. What about yourself, Judy, in industry? What have you seen where things usually fall apart?
Yeah, I think most deals do not fall apart for big reason. It's usually a combination of small issues. For example, communication. There's also managing emotions. Communication is the key. So common ones are unrealistic pricing. That's when it comes to the preparation before listing on the market. So buyers are not being able to secure finance or issues coming up during the due diligence. We also see delays when seller do not provide information quickly. They might be going on holiday or for some reasons they don't, the response after 1 or 2 weeks when the buyers is waiting and they lose patience, or when decisions become emotional. And once momentum slows, it's very hard to recover the deal.
I think, from the legal side, what I've seen in the past, observing other situations or coming in usually to try and clean it up, from a commercial litigation perspective, having to go to court, is usually things like the heads of agreement are too vague. And sometimes I don't necessarily agree that every transaction should have a heads of agreement. I think some should just go straight to a contract. Depends on the deal. It needs to be assessed case by case. But the dispute over stock value, whether stock is valuable, working capital, or handover, bad restraint drafting in a contract, unclear warranties, indemnities is a real bad area because people will try to avoid what they can, and it's up to your lawyer to make sure that it's watertight as best as can be done. It's still negotiated because there's two sides to the contract, so you can't dictate all the terms, but you can try and put in as much as you can to protect your client. Confusion over whether it is an asset sale or a share sale. Now, that should never happen, and you should be always using the right um, type of document, and it should be structured correctly. That should be clearly articulated from the beginning. And this happens with rapid sales and so forth, where the clients or the people involved want to sell quickly or buy quickly. That's a matter of managing the client. It's not easy. Everyone's different personalities, but you have to follow a set of policies and procedures as a legal advisor, and that this is what you follow. And if the client doesn't want to work with you in your system, then that is not the right client for you. And sometimes you
Yeah,
just need to say no.
that's right. The structure around the deal is just as important as the price. The lease can directly impact the value. Staff continuity will sometimes matters, and the handover is part of what the buyer is actually paying for. I mean, the transition period. If the business doesn't feel transferable properly, it is very difficult to justify the price.
You may find some employees are maybe you may wish to effectively make redundant, and others that you may think are integral to the business. You may just want to take the whole team intact, because maybe you take some and not others, and then the others that stay become resentful to you. You got to think about all this emotions involved because they're humans. We're not in the era just yet where we're just working with legal AI agents. Maybe moving there, but we still got humans involved. We still want to keep humans involved. We want to all keep our jobs.
So at the end of the day, my understanding is that we are dealing with people, and a good organization culture environment is very important. So when it comes to the employee or staff, during the transition, I would highly encourage the vendor to introduce the staff to the new owners and build connection with them. That's something, and then we will talk about the legal part. That's what I'm gonna suggest them to do. Understanding each other first, understanding the staff, and shake hands and discuss how you can work with me in the future. So that's something I would suggest them to do at the beginning, and then we talk about the legal part by drafting the lawyers drafting the employment contract or how the yeah payments will be. That's what I recommend.
I love that advice, Judy. To be honest, it's just absolutely you hit the nail on the head. Something as simple as introducing them and going out for dinner together. If it's a small team, it's not always manageable. But yeah, that's such great advice, Judy. It's humans. Because at the end of the day, the sale can create issues around employment entitlements and tax. And that's the legal side of things. If the business changes hands, some employee service may need to be recognised, depending on the circumstances. Restraints, handover terms, non-solicitation clauses can matter after settlement with employees, and so you also careful attention to not just the employees but to the contracts they're on. That could be different with different terms, maybe different terms to senior employees as opposed to legal. For example, if you've got like a law firm and you have legal assistants, that may be something that you may have a completely different contract for a senior associate lawyer as opposed to a legal assistant. So, price matters, but leases, staff, consents, transition often decide whether the price survives. And I'd like to summarize by saying, from my perspective, buying and selling a business is not just about finding a price. It's about making sure the business is marketable, the risks are known, and the deals match the reality.
Yeah, so from my perspective, the best deals are the ones that are prepared early. So sellers, they get organized before going to the market, and the buyers can ask the right questions before committing emotionally. That's usually what separates a smooth transaction from the one that struggles.
Yeah, I agree. And I'd like to say thank you so much for joining today. It's been
Thank you, Michael.
wonderful. Um, I look forward to having more discussions with you in the future. Joining your, if you have anything you wish to invite me to, I'd love the opportunity to come along and give my legal insights to the
Sure.
community. And I'd just like to wish you all the best, Judy, and I look forward to continue working with you into the future.
Thank you, Michael. We will. Thank you.